Good evening, good afternoon, good morning. I know we have viewers from many corners of the world, and this is the India Market Review. Welcome to the IMR for Monday, 27th Feb 2023. The previous IMR was posted on the 13th Feb 2023, so almost 2 weeks. And I will post the link in the comments below for you to go have a look at that. And you can check out for yourselves about what we discussed there and what happened in the markets thereafter. We do many other IMRs. We just did the global market review about an hour before this, already been posted on our YouTube channel. You may have already received the link to watch it in case you did not, and you would like to receive these updates. You have the contact information on the screen. You can WhatsApp us on the India number +91 93419 67573 or email us on askmusa@gmail.com, and we'd be happy to add you to our lists and respond to any queries or any feedback or any proposals for collaborations that anybody may have, which we definitely most welcome and look forward to. All right. So having said all that, let's jump into the session and look at what has been happening in the India markets. Now, before we actually do that, to very quickly highlight what we said in the GMR done an hour ago, that the rest of the world is in an uptrend while India is in a downtrend, at least for the last 2.5 months. And let me just illustrate this with what you're seeing is the Nifty chart on your screen, right? Daily chart, very simple candlestick, some moving averages, and you can clearly see the downtrend channel in that India is in. And if I just switch to the S&P 500 for the US, then we have an uptrend channel which has happened in the US and indeed the rest of the equity markets, the broad major equity markets of the world, especially Europe and some other places. So while the other major markets are clearly in an uptrend, India is right now in a short-term downtrend. That downtrend today got tested very nicely with the lows of the budget, and intraday it did break down from that but managed to recover from there. However, if you look at this on a line chart, you can see that we are very clearly in a downtrend phase. Whether this downtrend will now get support at the lows of the budget and turn up from here or not will be a very interesting thing to see. While we are discussing this very simultaneously on the other side of the planet, the US and other global markets are testing the trend lines of their uptrend trend line and whether they will take support there today, tomorrow, and turn back up. So both India and the rest of the world had some very interesting support levels at some trend line levels or support resistance levels. And it'll be a nice, interesting few days ahead to see whether these trends change for the shorter and the longer term. So as we discussed already in the webinar that was posted on the 13th of Feb, we said India's downtrend is likely to continue, which it has done. You can go review what we said that. It's there on the YouTube channel already. And we are at this, well, I won't say critical juncture, but interesting juncture where this trend could pause or may continue further down. Very much in line with what we had discussed. But overall, if you look at it from a longer term perspective, about a year plus, net, the market has really done nothing, gone flat, sideways, consolidated. And as we mentioned already, next year is the general elections in India. And there could be a lot of political news and fiscal policies that get announced in the coming days, weeks, which could keep the markets, in a sort of sideways guessing mode till we get clarity. And that clarity, of course, what we are really talking about is the 2024 elections. So this entire year, 2023, for the Indian market could be pretty lackluster overall, while certain sectors and definitely certain stocks are going to definitely do very, very well. Right. So with that, let's very quickly jump into the sectoral indices for India and look at what has been happening. Not in any particular order, except that the banking stocks have a particularly high weightage in the Nifty itself. So it makes sense to look at what they are doing and extrapolate from there what could or could not happen. So today, the bank Nifty was one of the few green indices and actually went up while the rest of the market went down. So in some ways, the bank space was a savior in how the Nifty behaved. Otherwise, the Nifty itself would have definitely closed lower, below the close of the lows of the budget if it was not for the bank Nifty stocks, right? So as you can see, the bank Nifty stocks taking support on the 200-day exponential moving average. 2 days on Thursday took support on the lows of the budget. So there's some sort of support happening at 39,600 on the bank Nifty, and it'll be interesting to see if this holds or does not hold. We'll do all the sectoral indices and then we'll come back to the Nifty itself and get a better perspective perhaps on what the Nifty is likely to do, right? So that's where the Nifty is, bank Nifty is rather. And you can see that, you look at this, the bank Nifty not very far from the Feb 22 top. So some sort of longest term support, not very great support, but nevertheless some support it has taken. And it is possible that the banking space may turn around. You can also see that on the RSI, it's been, coming to those 30, 35 levels and has been turning around from there. Tends to take support there, though of course that's no guarantee of any turnaround. So some body of evidence suggesting that a support on the bank side is possible. Moving to the space within the banks, the private banks versus the PSU banks, you can see the private bank index here more or less exactly the same as the bank Nifty, so nothing more to comment on this. While the PSU bank obviously and clearly underperforming rather in this space right now. So interesting to see what's going to happen. And the PSU banks definitely a laggard now. Whether this is perhaps a little bit due to the Adani fiasco, which is going on, right? And some of the huge exposure that the PSU banks have to the Adani group. All said and done, however, the PSU banks are above the 200-day moving average, while the private sector banks are, pivoting around the 200-day moving average. So, relatively speaking, you could make an argument that the PSU banks are doing well, though they are making lower tops and lower bottoms. Again, RSI and all at good levels. So I think the PSU banks are likely to correct a little bit more and go down. The index, the private public sector bank index is likely to drop about another 100, 200 points before it's likely to take support and perhaps turn around. Coming to the IT space, right? The IT space was actually doing quite well and then did this big crack today. But you can very clearly see again that it has come and taken support on multiple long-term moving averages. We'll have to see what the IT space does in the coming days. It's right now in sort of no man's land. Neither has broken out of the resistance level of 31,250 and on its way down perhaps to 29,000 and perhaps even lower, right? The auto space has gone sideways. So autos actually overall, I would say doing better than definitely doing way better than the overall market. Very quickly, if you were to compare the auto space with the Nifty space, you can very clearly see that while the Nifty was going down, the autos has basically been holding steady and going sideways for a good 6 to 7 months. There is the conversion, the rules for the higher level emission norms going to be applied from April 2023. Very likely to see price hikes in the auto space. And of course, as we already mentioned in the previous webinar, there are substantial waiting periods on many of the models. So definitely much more demand than supply right now. So there is this headroom that the auto companies have to keep increasing prices, and obviously that bodes well for their future profitability. And perhaps that's the reason why the auto sector has been able to keep its prices level and not really correct as much. Having said that, after almost 3, 4, 5 month consolidation, sideways consolidation, it'll be really interesting to see what the market ends up doing on the uh, in the longer term. So could be some good entry points on the auto space if it manages to take support. The metal space has a place which has been quite cracking quite strongly after making close to a life high of 6,900 in January 23, mid-Jan. It has just broken down and continues to break down quite aggressively, I would say. Uh, though, again, is it possible that this breakdown is over or not? I it's a little too premature to say that. That's for sure. Uh, tentatively, tentatively, right? This is way too early, but yeah, this is how the markets are. We might be looking at, you know, uh, small, not very significant, but nevertheless a bullish divergence on the RSI, on the metal space at this point. So it's already corrected about 10, 15, 20%. And as you can see, it's come to some pretty good support levels of all the way from May 21. If it breaks this level, then we are definitely looking at maybe even lower levels here, right? So that is around 5,020. So in the short term, yes, could be that some support could arrive for metals. Moving on to Realty. So this is the other surprise move of today, that the Realty sector has actually gone up today and taken support along with, like I already said, the banking space. So the banking space and the Realty space, both the saviors in some small sense of the Nifty not falling further today. Now, whether this will mean so there is the short-term outperformance that both the banking and the realty space has. Of course, the realty space, as you can see, way below the long-term moving averages, has corrected quite a lot, and it's nowhere close to its life high, unlike what the banking space was. Uh, Nevertheless, has taken some good support, and we could see some bounce here on the realty space, just demonstrating that the realty life index high was in 2007, very far from those levels, but almost a 1 decade bottoming out has happened in this space, right? And from a very long-term perspective, whether this could actually be termed a potential flag, at least in the monthly chart, some people will definitely not agree, uh, which is absolutely fine. But yeah, something to watch out for, right? Okay, so there we are on the and close to some very good long-term support. So yeah, there could be some interesting moves on the realty side in the coming days. So keep a watch on that. So banking and realty. Infrastructure, overall, more or less the same negative picture, uh, but has not cracked as much as the rest of the market. It does not, today's low is nowhere close to the lows of the budget about 10, 12 days back. So that way, sort of definitely an outperformer, whether that's a hint of strength to come in the infra space, definitely in the realty space. Little too premature to say, but these are the places that one would keep one's eye open to. FMCG spaces, right? So FMCG, as you can see, that green line right on the top is the life high. Definitely not corrected as much as the rest of the spaces as we saw in in banking and uh, other places. Um, these are the recession proof sectors, FMCG and pharma. So just let's look at pharma very quickly. But pharma very clearly doing quite poorly, right? So pharma quite poor in its move from its life high. It's already now fallen about 20%, right? uh, Now, after falling 20%, if we were to look at some long-term support, then that's where we are, right? And very, very close to that. Can't say that the fall is over, but it's quite possible that we are close to the RSI again at oversold, highly oversold levels, and some scope for a reversal from these places. So that's on the pharma side. On the energy side, really nothing much. This is a mix of all your oil and gas companies, so the weakness continues. But clearly, there is some strength showing up on the RSI side here, and it'll be interesting to see how this turns around. Only on the daily side, it's not showing on the definitely on the other sides. When I say other sides, I mean other time frames. We'll wait and watch about how this pans around. Um, then we have the media space, basically dominated by Z. So we know, probably you all know what's happening in Z, gone into insolvency, etc. So that's the big heavyweight in the media index. So that's just cracking all over the place. And well, this is not the sort of falling knife that one wants to be catching at all. So that's very quickly the overview on the um, India sectoral indices. And even if you look at the Nifty 500, well, you can clearly see that the Nifty 500 clearly breaking down well below the budget lows. So the broad market definitely at doing worse than the narrow market or the blue chip stocks. That's for sure, right? Uh, so let's see, this fall has taken some nice support, or rather has come to some good support levels. All right, so there we are at broken the support levels, and never know, could you look at a bounce that you see. uh, and like I said, the Nifty overall, with it on a support level, whether it will turn around along with, let's say, the rest of the world, if the US also turns around, then that will be definitely an interesting thing to look at. So just to very, 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 very quickly review this, you're looking at a number of sectors in the downtrend. So the banks in a downtrend, though they took support today. Then you have IT, which started to really fall in some substantial fashion today, but very close to long-term moving average supports. Then you have autos, which have done relatively well, but they are also been falling in the last 12 days. You have metals, which have really, really fallen substantially. They are quite a big heavyweight in the Nifty after the banks and the IT companies. Then you have Realty, which is a small savior. Okay. And then you have FMCG, which has also cracked today. And then you have Pharma, which has been doing quite badly for several months now, right? So overall, you just have all the sectors in, either strong downtrends or started to do, a sort of downtrend, for example, in IT, right? Now, when you have these multiple sectors quite all aggressively going down like that, it's not that it's quite often that you will find some sort of pause to that fall when everything is falling for really no substantial reason except just a sort of lack of direction, if that's the best way to put it. Budget is over. There's no other major event right now. There's some state elections going along in the northeast of India, but nothing of a major state, and nothing an outcome either way, whether it's for the ruling party or not. I don't think it changes the narrative in any form. So yes, we are at some interesting pivotal points. So while majority of, or not majority, all the sectoral indices are definitely bearish. Some of them have been bearish for substantially long periods of time and are at good supports. And if they can take support wherever they are in the maybe in the next 1 to 3 days of trading, then we could see the Nifty hold up at its 17,350 levels and not go any substantially lower. If it does, however, then I think 17,000 level and even 16,900, 16,800 could be the very good short-term strong support to look forward to in case the breakdown happens. So we are at a point where support is possible and we could see a turnaround. On the other hand, if a breakdown happens, then I think one can start looking at entering the market at 17,000 levels, right? Also, again, to reiterate what we started with, the global markets are in an uptrend while the Nifty is in a downtrend. If what's the interesting scenario would be that if the Nifty, if the global markets, continue trending upwards and the Nifty then catches the flu from the global markets and the trend reverses, then, well, there's not much of a downside left, at least in the short term. So we could see maybe even a move to 17,800, 18,000 levels before maybe the next downtrend again starts. So that's on the short term. Like I said, on the very long term, multiple months, it's a very sideways, iffy market, and one would be have to look at individual sectors and individual stocks to actually look for specific opportunities, right? All right. So with that, I hope it was insightful and educative about how the India market is related to the global markets and then the sectors within the India market and how they are performing relative to each other, and where possible, strength is likely to be for those looking for opportunities to enter, right? More detailed individual stock reviews are there in the making, but are not really there for public consumption, not as a public post. If you're interested in specific stock reviews, stock setups, and opportunities for both trading and long-term investing, do get in touch and we'd be happy to discuss things on a one-to-one basis. But none of this is any investment advice, and it's meant only for educational purposes. Thank you so much for attending all through the end, and I do look forward to your feedback. And you can look forward to the next IMR either on a week to 10 basis, 1 week to 10 days basis, we will do that. Or if any significant event level, happens in the market, breaks in the market, then we'll definitely do an impromptu IMR and feed that back onto the YouTube channel that we have. So thank you so much and looking forward to your inputs. Have a great week ahead. Goodbye.